Welcome back, guys, to Swing Trading and Coffee. My name is Anthony, and today I'm going to be giving you a breakdown of what is happening in the stock market. Now, I just came back from my travels, and I'll be honest with you, these past 2 weeks have not been fun to trade. Really choppy price action. You get a move to the upside, followed by a massive flush when you think you're already safe. We have to realize that this week there is very low liquidity, and I'm going to break down for you what I think is going to happen next, what the probabilities are, and what my personal game plan is. All right, guys, first let's take a look at the VIX, see what's happening. So we had these two big peaks here, very sharp moves to the upside, and it looked like it was going for a second move up, but then it pulled back. We had this level here, kind of like a support level, and it broke through it. And not only that, it broke through all these EMAs, and it's kind of reset to the bottom here. So I don't see any structure in the VIX where it is, finding higher highs. It actually reset completely. So that for me is the first bullish sign in the market. Now let's take a look at the stock heat map. So this is the performance for the past 30 days. And the reason I picked this time frame is because that's where most of the turmoil has been happening in the past 30 days. So looking at it here, you have the biggest winner, surprisingly, is Google, AVGO. NVIDIA is down on the month, Apple up slightly. You have in the health technology sector, Lilly doing really well. And in finance, pretty much flat, a little bit down on some of the names. And on retail and trade, Walmart up, Amazon just pretty much flat. The rest is red. So, we did have a big spike about a month ago, and then now it's completely reset. This could mean one of two things. Either A, we've had a complete flush out of all the leverage in the market, because every time the market pulls back, people get back in with leverage, expecting the next big move to the upside. When you've had this many people get burned, that could typically be, the time where people start cutting back on leverage and trading smaller, and that could lead to a path of healthy growth in the stock market. Now, that's one way to look at it. The other way to look at it is that we have completely reversed course and broken the long-term trend. That is partially true, but not completely true. Now let's look at the SPY. So I have quite a bit of indicators here set up because I want to give you guys the complete full picture. So let's break down what happened in the past couple weeks. We were trending in the channel, very long-term channel, holding up really well, and then we started to break out of it. This was the first one, and it reacted very strongly. Buyers stepped in very aggressively and moved this back up. We came back up into the channel. Everything looked safe up here, and then we rejected. We came down, broke the channel again, just barely, and, people start thinking, myself included, is that we will probably get another bounce here. And that didn't happen. We just started chopping all over the place. And then, once we had a second candle here, this specifically, this red one, that was really the light to get out or just flip short. I wasn't in that boat, unfortunately. I did open up some hedges, up here, and then, I got out really early thinking that was the end of it, whereas it continued to flush out and it wrecked a lot of people. Now, in swing trading, what happens is you make a little bit of money and then you give back a little bit. And when you hit the time of year, it could be 2 to 3 times a year where you have a very strongly trending market. Whether to the upside or the downside doesn't matter because you can play it both ways. When you hit that trending part of the year, that's when traders make their most money. Now, eventually you do hit some chop, or you do get maybe 2 corrections. I think we've gotten close to 3 very major corrections in the past couple years. And Tom Lee had broken that down pretty well. I'm going to see if I can pull that clip up for you in a second. But first, let's look at this structure. So, we came down here and then we had a very strong move. We have 1, 2, 3, 4 green candles showing that buyers are stepping in. That is the second bullish signal I'm getting. However, it's not quite safe yet because we have this trend line here overhead and we rejected off of it. Now, considering that we are, in a holiday week, Thanksgiving, there's low trading volume. A lot of traders take off. They don't want to, get in on the low volume. And if you look here at the volume, it's not very low, but it's not, it's decent, but it's still below the 20-day average on the volume. Looking at the RSI here, we are tilting upward, which is good. I don't see any divergences. So if you draw a line here, it's kind of pretty much the same as what's going on up here. MACD about to flip green here. That is another bullish sign. So, it's looking like we may get continuation, but I'm not betting on it completely until next week. I want to see a nice breakout of this trend line. And if it comes back to retest it and goes up again, that's fantastic. No problem with that. The only problem is, the thing is you guys have to watch out for is if there is not enough steam to get us back up into a bigger run to the upside. And what could happen is that on Monday, we might gap above here, and then we start to pull back down again. And that would take us down to about 645. The reason I have this level marked down, you'll see these grayed out volume bars here. This is our next area where we have a lot of volume trading. So this isn't a point of control. If it comes down, this could be our support before going back up again. For now, yeah, I do have some long positions. I have one short position I'm going to share with you guys as well, but I'm playing it extremely light until we get a clear signal in the markets. Flipping over to the triple Qs, this kind of made me notice something looking at this chart. You'll see here I drew like a possible head and shoulders pattern where, here would be the neckline. And if we start to chop around here and reject to the downside, that could be bad news. Now, a head and shoulders is not really confirmed until it breaks down here. So you need to see a break of that neckline. Now, if we don't come down here and break this, we could see some chop sideways. That is another scenario. And some people may, post comments like, oh, so you don't know if we're going up or down. It's either up or down. Yeah, that's exactly what it is. And the whole point here is that you are reacting to levels. You are not trying to find bias to the upside or to the downside. Let's take a look at the RSP. This is the equal weight S&P 500. And what this does is it gives every stock in the S&P 500 equal weight. That way, you don't have like one stock leading everything. This kind of balances things out and lets you know what the breadth of the market is. Do we only have like a couple tech stocks running, or do we have a broad rally? And this time it's looking like a broad rally because we were not doing so well the past couple months, and tech was leading everything, tech and AI stocks. So we are here. We came back up. So this is another bullish sign, but you have to note that we are approaching an area which could be resistance. If we can break through this, that's fantastic. That for me would scream absolutely bullish. But right now, it's a little early. Let's take a look at the SMH. SMH is actually looking quite constructive, more than the S&P. And the reason is we not only recovered from this big drop, we are technically back up in the channel. So if you extend this channel here like that, we are in the channel. So this could have just been a really big, exaggerated correction to the downside. If we can break above here and hold, important thing is hold. Like if you see one green candle above this line, that doesn't tell you to go long immediately. I want to see that confirmation candle that we are back up above this zone. Maybe even two candles would be even better if you consider that you are looking for confirmation above this resistance level. Now, I may sound way more cautious than I've been the past couple weeks, past couple months, and that is actually the right way to do it. You have to be very cautious at all times because the new norm in the market is we get big moves to the upside, lots of excitement, and then a massive rug pull. Now, if you can avoid those rug pulls or minimize the damage from those, your account will be doing well. If you end up getting overexcited and overconfident and you get the rug pull, you're going to give back most of your gains, if not all of it, pretty fast. Guys, let me know how you have been doing the past couple of weeks in the comments. I really want to know how everybody's been handling this crazy volatility. Let's take a look at one of my favorite stocks still, Tesla. We have gotten back above this box here. So remember I said I'm very bullish on Tesla in the long term, but in the short term, if we break down below this box, that is trouble. And you know, it did hold. You can draw a trend line here and you have a little bit of overextension, but this really is where it held up. Now, if we get another green candle and we can get above this level at 434, I'm going to say it is probably time to get back into Tesla. Now, I do have a small position in Tesla, but I'm not going to go heavy on it until we get back up here. Overall, I am bullish on Tesla. I think I want to say that this is the bottom for Tesla because it had weathered out some really extreme market conditions. Now, unless, like I said, what happens in the SPY or triple Q, you come back up here and then you fail to the downside, that could bring us back down to 366. Now, anything is possible. Nobody expected such a crazy meltdown, especially in crypto. Crypto was an absolute disaster, and I'm going to get into that later in the video. I think it is a great time to pick up some crypto right now. Sentiment is absolute rock bottom. People have gotten flushed out so hard. I think couple weeks, couple months, it'll be in a much better place. However, I have to be clear here. The narrative on Wall Street right now is AI. It is not crypto. They've moved away from that because AI is expected to be a really big money-making machine if the trend continues. And I think it will continue. And the reason for that is NVIDIA. We had incredible earnings. I mean, the earnings were pretty good. The guidance was great, but it had a complete meltdown. And even though I think we might bounce here, I did take a small short on NVIDIA, very small. And the reason is the news from Google with their new chips could put some pressure on NVIDIA. It's not going to dethrone them, but now NVIDIA has more competition. So people are going to start evaluating that. I think that we could have a quick pullback down to about maybe 168 in the next couple of days. If it bounces, no problem. Then we know that we are in recovery mode and I can flip long. Let's take a look at Google as well. This has been absolutely ripping to the upside. I was actually thinking about taking a little short up here, but no, because once it started to wick up, you see that wick up here, it's not only going vertical. When it had the pullback intraday, buyers stepped in right away. And the next day, low volume day, it held pretty well. How far can this go up? I'm not really sure, but what we can do is do a fib extension. So if we start here from the bottom to the top of the move to the bottom, you'll see here that we are at the 1.0, and that's exactly where it stalled. I'm going to zoom in here so you guys can see that candle. It stopped right here. So this may be a resistance zone. I would not be surprised if it comes down to fill the gap and continues up to the 1.618. It has very strong momentum and it's possible. Am I ready to go long here or short? No, because the risk reward is not that great for me. It could have a great move to the upside from here and just continue, but I prefer to buy in on the pullbacks. So, if you had bought somewhere down here, you're doing fantastic on Google, but I just don't think this is the spot to get in yet. PLTR, this one I did open up a long position in again. So we did break out of the channel, but we have a very big point of control here, lots of volume, and it did react to it. It bounced very nicely. So right now, what it's dealing with is the overhead resistance from the EMAs and from the channel. So watching it into next week to see if we can get above here, that could signal continuation to the upside. AMD, this one is absolutely ridiculous. This had so much strength up here. Like, it was very strong. It was getting ready for the next leg up, and it just went down. It went down and flushed so hard. It filled majority of the gap here. And we do have a support, if you draw this line here, back from around August. So as soon as it came towards that August level, it started to bounce. Now, the bounce is still not strong enough. We have 1, 2 candles, wicks down here, which show that buyers are stepping in, but it hasn't been able to clear the 50 EMA, which is that purple line right here. So until it clears at least the 50, I'm not going to consider getting into AMD, but I think if this does move to the upside, we could slingshot up pretty hard to around 290. And that's a big, big move. I'm not saying it's going to happen in a week or two, but it could happen over the course of the next 2 months or so. Micron, this one is one of the strongest stocks on the, in tech right now, and it is signaling an entry long here, early signal, because we only have one candle that has gone above the EMAs, but we had a really strong bounce off the 50 and off of this level right here from September or October around 195. So if we get a second candle here and it closes, we get a nice strong close, I still think it can go up to 279. Next up, we got Meta. So we have a pretty decent bounce off of this area here. And let me lay down a little bit of a volume profile here so we can see where we are. We did bounce off of this level perfectly, and we've tackled the first 2 EMAs on the chart, and this could have potential to move up to here. That's about 695-ish. Can it go higher? It absolutely could. But in the short term, I'm looking for a move up to about 695 or even a little bit lower, 688. Now, what happens after that, it's hard to tell. We'll have to wait till it gets up there to see if it rejects strongly or if it just blows past it. Again, we see the same theme as what I said in the SPY and triple Qs. If it can clear these levels, great. If it bounces and rejects, then it's not good. I'm leaning more right now towards money rotation into different stocks because we had a whole bunch that were arguably overpriced. And, those 2 CEOs, big guys, who said the market is overpriced and they sent shockwaves all across, you know who they are. I think that institutions have seen that the market is too high and they played the manipulation game. They said it's too high. They probably were selling already. And then now that retail has jumped off a cliff, now they can start buying it back up at much cheaper prices. The only thing is, are we going to see cracks in the job market continue to freak people out? And what's going to happen with the Fed? So they're going to end quantitative tightening pretty soon. And when quantitative tightening ends, sometimes the market will start to drop because when they end quantitative tightening, their job is done and they probably broke a couple things in the process. It's usually when quantitative easing comes in, and that's when the market starts to rally pretty hard because money's coming back in. Now, there's the other question of, is liquidity coming back in the market? We had a government shutdown for a while. Liquidity, from what I understand, can come back in fast, but it's not really apparent based on the way the market is trading right now. On to United Health. I do have a position in this, and I just bought it like about a week ago, and this is more of a defensive play. So when markets are shaky, money starts to move into things like, I guess, like energy, healthcare, those really essential things. And what we're seeing here is it's trying to tackle the EMAs. I got in about here. I thought that this was going to be the bounce. We did have a nice 2 wicks at the bottom, 1, 2, and 2 more candles green, giving me that confirmation to go long. However, it did stall at the EMAs. It would have probably been better if I had waited for United to confirm above the EMAs before getting in. Then I would have had a much better entry point down here around that support level. But lessons learned, and moving forward, I'm going to be really cautious with this market. Let's take a look at Amazon. Amazon looking really good, in my opinion. We did have a clean bounce off of that diagonal trend line there. And now we're trying to tackle these EMAs. We have this resistance here at about 238. I think that we probably are going for a retest of the highs on Amazon, but waiting until Monday till we see how this acts. Oracle, this is this is the biggest shocker for me because I was very bullish on this one. And you may have a great setup, but it just goes against you. And then you have to accept that, realize it, take the losses, and move on. However, it seems that we have reached some pretty extremes in Oracle here. We've actually come down to fill this tiny little gap at the bottom, which, if you asked me a couple weeks back, you think it's going to come back down there? I would say, no way, man. It's up here at 343. And if we take a little bit of measurement, see how much this has dropped. This has dropped 46%. Just like 2-3 weeks ago, Oracle was all the rage. Everybody was talking about how their growth is just going to be crazy and how they have so many new partnerships coming in. But the market is what decides what happens. The market has a mind of its own, and you have to respect the market. Now, do we have a possible long here? I think at this point, the risk reward is justified. We've had such a colossal drop. We've come down to this support level. And if this snaps back, I think we could get a violent snap back up to roughly 237. And that's a 26% gain. But maybe wait for, I'm going to wait for that confirmation above this blue line. You see that right here. We have a little bit of overhead resistance, previous support. Once it starts to confirm above here, that may be a signal to go long. And actually, I do want to add here an alert. So, if this triggers, I'm going to try and take a long on this, but we will see. Netflix looking very overextended to the downside. And let's look at the what the indicators are showing. RSI not in oversold territory, but as you can see here, it has like a double bottom here. And MACD still in the red. So maybe it's a little early on Netflix. Netflix has been underperforming regardless of the market. If you look here, this big drop, which goes back to July. So it's been underperforming. I would probably stay away from this one for the meantime. There are much better plays, I think, that could bounce. Intel, I'm not saying it's a great company. I don't have no idea the future of Intel. All I know is they are doing crap and, government stepping in to help them out. I believe NVDA as well, trying to help them out. So, this is one of the beatdown stocks. We have a really decent move up here, very good structure. We never came down to fill this gap here. But, after this move to the upside, we had the pullback, and now we look like we're going up again. This could hit $44.50, $45. But I do want to see some volume. Volume has been pretty low. Yeah, volume is really low, so I cannot take this as a signal to go long here, but watching. Sometimes the best things you can do in swing trading, sit on your hands until the market resets. And I always tell myself that, but when the market's pulling back and you're expecting a really big bounce, you just don't want to miss out on it because the moves have been so violent up and down. You catch a nice snapback to the upside, you make some money. But sometimes it's best to just wait for it to reset. Don't buy it when it's high. Sounds very basic advice, but it's hard to follow that advice when the market is very euphoric. SoFi, this one is starting to catch my attention a little bit early. The upside here probably go up and test the highs again, 32.50, but still a little early. I'm going to watch this. If we get another candle here on volume, it may be worth a shot. Just a very quick look at crypto. I know not everybody here is into crypto, but the reason I like to look at it is because this is your biggest risk on asset. So Bitcoin has fully reset. I want to say it's reset us back to last November. Bitcoin has given up all of its gains for an entire year. Now, is this the beginning of a bear market for Bitcoin? I previously said if we break this line, it's possible. Now, I'm not ready to jump in on this, and I have gotten rid of my MicroStrategy calls, not doing that again. If I do get in on this, it's going to be IBIT. Now, I really want to see this get above 95,690. So if we can get above this here, we can use it as support and build a base and try and get back up. I'm not calling for all-time highs this year. I think that boat has sailed and it's looking very bearish. A lot of people have dumped their crypto, and guess what? That's the perfect time for all these new crypto companies to come in and buy some up. Of course, they do it OTC, so it doesn't really move the markets. And once they've bought enough, I think they're going to start pumping crypto again and say it's the future, blah, blah, blah. If you don't own crypto, your fiat is worthless, all that stuff we've heard a million times. But for now, we are looking at some support. It's come back down to this area here, which held previously well. I want to see it get up here, and that's when I'm going to be long again on Bitcoin. IBIT, the reason I bring this one up is because I was looking at the options. So we do have a pretty decent sized put wall at 49.21. And that tells me that based on the options market, it's probably not going to go lower than this. So we're going to see how this plays out. Ethereum, it took just as much of a hit as Bitcoin, probably more. And we've reset down to this point of control. And that for me is looking pretty sweet. We just need to get above here. It's looking a little bit better than Bitcoin because it's already closer to that trend line. So maybe Ethereum will lead the way. If 2026 we go out and take the highs out, that's at least 60%. You could play the BMNR if you are totally bullish on it. But at this point, I'm starting to steer away from all the treasuries. I'd rather just own the underlying because these companies are just too unpredictable, and markets have started to re-rate what they see as an appropriate MNAV. So, I think gone are the days where you see MicroStrategy at a 2+ MNAV. I think that most of these companies will probably sit around the 1.2, 1.3 MNAV. If they get a little bit ahead of themselves, maybe 1.5, 1.6. But I don't think we're going to go back up to those crazy numbers again. CHAINLINK, this one I am quite bullish on. I think this is a hidden gem in crypto. It is a core infrastructure play. It isn't going anywhere. It has very little competition, and the partnerships just keep piling up. So I do have a bag of CHAINLINK. I did load up a little bit more, around 13. I think closer to 14 when it was dipping here. We have this trend line that goes back all the way to June of 2023. You have 1.2, 3, 4, 5, 6 points of contact. This is a very solid trend line in my opinion. And the way I see it is you could double your money if it reverses. You could double your money here easily going back up to $25, $26. This is not financial advice, of course. Do your own research. This is just what I am doing. I think that as the partnerships start to gain traction, we're probably going to break that all-time high market cap next year. So I'm looking at about 150% or more. It could go higher. I think it will because Chainlink's market cap right now, it has been absolutely obliterated. Market cap under 10 billion, whereas you have, bigger ones like Solana and Cardano, actually way bigger. I don't think Cardano should be bigger than Chainlink in my opinion, but I think this one is one of the most undervalued in the crypto market. Okay guys, so that wraps it up. Let me know in the comments what you did, how you're doing in your trading in the past 2 to 3 weeks. I really want to hear your stories so we can connect and discuss. And tomorrow I'm thinking of recording a video about what went wrong in my trading the past couple weeks, lessons learned, and how I'm going to fix it. Also, I'm going to include a little bit of AI, show you guys how you can analyze your trading history start to finish, come up with your, find out what your greatest weaknesses are, and a game plan to address it. If you want to see that video, let me know in the comments so I can prioritize it. Also, let me know if you want any updates on any topics. I'm thinking it's time for a Tesla video. Anyways, I will see you guys tomorrow. Take care and happy Thanksgiving.